Shark, good to see you. How you doing? How you been? How's things, Shark? Comatose, good to see you. How you doing? How you been? Evening, Miles, the CMF. Joe, good to see you. How you doing? How you been? Pablo, hi, Miles. How's it going? It's going good. Good to see you, Pablo. How you doing? How you been? Mickey, good to see you. How you doing? How you been? Hello, Miles. Welcome back. Mav, good to see you. How you doing? How you been? Good to see you as well. A lot of things have been also happening today in terms of, again, the deals that Trump is making in the Middle East. And according to some sources, the newest deal is about to be making with Iran is what's on the table. All of these are going to be causing the market to essentially stabilize itself, which is a great thing for the crypto market space and the stock market in general. But all the deals that Trump is making so far, absolutely amazing. Is what we like to see, because it makes a very stabilized market space. Now, on tonight's live, we're going to be talking about essentially stable coins. We're going to be talking about the Jerome Powell's recent speech on the market space in terms of where he thinks the market space is going to be heading. We're going to talk about essentially perspective from Jamie Dimon. He's got a new perspective on the market space as well. We're going to talk about stable coins in terms of regulations, how far that's come so far. We're also going to be discussing on tonight's live regarding matters of essentially Bitcoin's price points from different CEOs, where essentially they see Bitcoin reaching this year by the end of next year, or even up to 2030. We're also going to be talking about tonight's live regarding the UK. The United Kingdom has essentially came up with a report on regarding people who hold cryptocurrencies, what their next steps should be, and where also the UK is heading towards in terms of crypto regulations, which we're going to go through on tonight's live. We're also going to be talking about the Russian and Ukraine situation on tonight's live as well. It seems like Russian situation has escalated, but there's an outcome to consider is what I would say, which we're going to talk more about on tonight's live. We're also going to talk about Wisconsin in terms of their Bitcoin ETF on tonight's live. We're going to talk about Hong Kong's police new method in terms of finding criminals on the blockchain space, specifically people who use it for illicit activities or people who essentially skip on large amounts of tax. We're also going to be talking about on tonight's live regarding FTX exchange, which is an exchange we haven't talked about for a very long time, but the reason we're going to talk about it is because they're getting ready to distribute a large sum of money back to essentially people who used to hold their cryptos on FTX exchange. That could be seen as a positive sign. We're also going to talk about tonight's live regarding China. A ginormous Chinese company has decided to essentially invest into large amounts of cryptocurrencies, which we're going to talk about on tonight's live. We're also going to be talking about quantum computing on tonight's live as well, because it seems like the worst nightmare for Bitcoin maxis has came about once again, and it has came about from BlackRock. As usual, BlackRock's last advert was regarding you can mint more Bitcoins, and their newest edition regarding Bitcoin isn't going to keep the Bitcoin maxis happy, which we'll get to that news. We're also going to talk about the European Central Bank on tonight's live as well. They've got a new perspective on the market space. They've got a new perspective on regarding digital euros and cash. We're going to talk about essentially institutional investors inside of Bitcoin. Is Bitcoin mostly owned essentially by retailers, or is it mostly owned by institutions? We have new numbers to go from tonight's live. We're also going to be talking about tonight's live regarding the Ripple case situation, Ripple versus SEC, and the news updates. So mixture of essential news to go through on tonight's live as usual. But before we go through any of those news topics, just want to say to everyone watching right now, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles, and this is episode 308 of the CMF Live. And in this live, I always talk about the most recent news that's happening around the world in terms of cryptocurrency, CBDCs, AI, politics, regulations, pretty much everything you need to know regarding this world completely transforming into a digital space. We also do Q&As on this live, which means if you do have any questions or a statement to make, put it down inside the comment section. I'm more than happy to read out any comments you may have and also help you on any questions you may have. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So, welcome to CMF Live. If you're watching this for the first time ever, if you're regular, let's go CMF. By the way, thank you so much to everybody who is liking this live right now, who's retweeted this live right now. If you watch this on X, and thanks so much to everyone who's put a comment outside live on X, and thanks so much to everyone on YouTube who's watching right now, who's also liked the live. If you've also followed and subscribed right now, thank you so much as well. CMF members, if you haven't liked or retweeted this live on X and you're watching on X, just take 5 seconds to like and retweet. I'll essentially greatly appreciate it. It will also help to expand the CMF so we can help out a lot more people. Now, before we go through the first news, let's go inside the comment section first. And the first news we're going to go through is regarding Jerome Powell's recent speech. But let's go inside the comment section first, and then we'll go straight into that first news. Let's see where we're at. Hi, Miles. How's it going? Artistic. Good to see you as well. How you doing? How you been? Morning, Miles of CMF. Shelly. Good to see you as well. How you doing? Morning. How you been? Good evening, Miles. How are things going? It's going good, Callie. Good to see you as well. How you doing? George. Hi, Miles of CMF. Good to see you as well. George, how you doing? How you been? Good evening, Miles. Funky brother. Good to see you as well. How you doing? How you been? Bullock Soppy. Good evening, Miles of CMF. Good to see you as well. How you doing? How you been? Funky brother. Welcome back, brother. Nice to see you again. Good to see you as well, too, brother. How you been? What's up, Miles? What's up, CMF? Kerry, good to see you as well. How you doing, brother? How you been? Manny, good evening, Miles of CMF. Good evening to you as well. How you doing? Good evening, everybody. GP, good to see you as well. How you doing? How you been? Funky brother says, I didn't know that you did the live last night. I had to catch up today. No problem. Yeah, I started a live show back up again yesterday, and the only reason I took a week off was because I was incredibly ill. But I'm back to normal. The illness that I had made me slightly paralyzed, but I'm able to walk, stand, and lay down and sit down again, which is great, because if I couldn't, surgery would have been next. But I'm back to normal with slight pain, but I'm back to normal. I didn't. Good evening, Miles and CMF. Free Feather, good to see you. How you doing? How you been? G, good morning, Miles. Good to see you. How you doing? How you been? XRP, let's go, funky brother. Ray, great, greetings, Miles and CMF. Good to see you. How you doing? How you been? Ross says, agree. Sui and Tushi are fire. Sui is doing quite well for itself. Tushi, I'm not really sure where it's standing. To be fairly honest, I haven't looked at Tushi's charts. Never. I pretty much never looked into it. But Sui, I know it's doing well for itself. How are you doing, Miles? Dios, good to see you. How you doing? How you been? Kerry, any new developments on Coinbase being hacked? Coinbase is not really hacked as far as I'm aware. So no new developments, no. Now, or if you want to elaborate on that, Kerry, I'd be more than happy to help you out. But first news on tonight's live regarding Jerome Powell's recent speeches, which we're going to be going through right now. So, the Federal Reserve, Jerome Powell, warns of potential supply chain disruptions. So Jerome Powell, once again, has come forward and stated that the market space is not doing too well for itself and inflation is still too high. And there's so many other factors in play inside the United States, and he's blaming all on tariffs. Yet Jerome Powell can help with the tariff situation by doing rate cuts, but it seems like he's reluctant to do any sort of rate cuts as usual, and he just wants to complain about it. So here we go. Federal Reserve Chair Jerome Powell expressed concerns over essentially potential supply chain disruption during his speech today. He stated these disruptions might affect economic growth and inflation. Jerome Powell warned that trade policy uncertainties, particularly tariff-related, could impact small businesses, vital links essentially in supply chains. These businesses face elevated disruptions, risk due to limited credit access. Jerome Powell highlighted critical issues regarding the U.S. economy, noting that the tariff-induced supply chain disruptions threaten economic stability. The exhortation follows a broader dialogue essentially involving policymakers addressing economic challenges. Larry Fink, CEO of BlackRock, also essentially remarked and said, "We believe that digital currencies have the potential to transform the financial landscape." Reactions from industry experts reflect growing concerns over how these supply chain disruptions could ripple through the global economy. Jerome Powell's acknowledgement underlines the need for the continued analysis of economic policies and impacts. Insights on blockchain essentially technology and its future implications show technological innovations offering alternative stability and supply chain uncertainties. Supply chain disruptions could lead to significant inflationary pressures on the economy. JP Morgan Chase CEO also gave his perspectives alongside Jerome Powell and essentially the CEO of BlackRock. He said, a recession was still possible in the country. The CEO essentially cautioned of a recession a week after the US inked a trade agreement with China in Geneva in Switzerland. Jamie Dimon said that the recent rollback essentially of tariffs between the US and China was the right thing to do. It definitely was, but it's nice to see that China finally came to that table because it needed to. It was very weak, even though it essentially perceived itself to be very strong. During an interview with Bloomberg Television, essentially today, the CEO of JP Morgan Chase, Jamie Dimon, said there was still a possibility for a recession inside the United States. The CEO essentially noted that if there was a recession, he didn't know how big it would become. Jamie Dimon added that he could not tell how long the recession would also last. The CEO stated that he was hopeful the country would avoid a recession. Jamie Dimon explained that the recession was due to continued uncertainties, mounting pressures on markets and economy. He cited issues like America's increasing debt load, geopolitical conflicts, tariffs, and raising interest rates. Jamie Dimon also noted that he would defer to the economists at his bank, who gave the recession a 50% chance of happening. JP Morgan's chief economist, essentially Michael, said today that the outlook for a recession was still elevated. The economist added that the outlook was below 50%. According to Jamie Dimon, even with the pauses in tariffs, the taxes on imported goods were still higher than they were essentially a year ago. Higher the taxes on goods imported from China to the United States could lead to economic essentially damages. The CEO revealed that many people were still holding back on potential investments inside the United States. He clarified that the investors hesitated to invest so they actually could think through what they wanted to do. Jamie Dimon noted that there would be a little investment in the United States because the country essentially irritated a lot of people. He noted that the impact of reduced investments would not be widely left. What an absolute load of bollocks coming from essentially Jamie Dimon, to be fairly honest. Jamie Dimon has said there will be little investment inside the United States because of all the tariffs that Trump is doing. I'm sorry, does Jamie Dimon not own a TV or have access to the internet? What is Trump doing in the Middle East? Boeing, in the words of Jamie Dimon, there's going to be little investment inside the United States because Trump's tariffs are causing so much damage, is what Jamie Dimon said, CEO of Chase Bank. Trump in the Middle East has just, putting aside all the deals, let's just pick one of the deals out of the pot. Trump closed a deal for Boeing, which is the biggest one in their entire history, where a Middle Eastern country is going to be buying hundreds of planes from them. But in the words of Jamie Dimon, and that's the biggest deal Boeing has ever had in their entire company history, and that's because of Trump. $1 billion contracts are being made, $1 trillion contracts have been made with the Middle East and the United States. But Jamie Dimon says there'll be little investment because Trump's tariffs are ruining everything. The amount of bollocks that just comes out sometimes from Jamie Dimon's mouth is incredibly comedy. The CEO stated that America was not a bad destination for investments, but little investments was going to be coming towards it. He joked that if anyone wanted to invest all their money, they would put it essentially in the country. Trump announced tariffs essentially in April on dozens of nations. Days later, the president declared a 90-day essentially pause on tariffs to seek trade essentially agreements. Jamie Dimon has repeatedly advocated for U.S. Treasury Secretary Scott Benson to lead the discussions. The CEO also recently sought a quick resolution to uncertainties through his annual shareholder letter. The CEO said there were still uncertainties on issues of tariffs. He added that the pauses essentially were great for both the economy and the market. Jamie Dimon also stated that the right thing to do was to back off some of the tariffs and then engage in serious talks, which is exactly what Trump has done with the 90-day pauses. Earlier this week, China and the US agreed to temporarily pause their tariffs on their products while they work on long-term agreements. The US lowered tariffs imposed on Chinese goods from 145% to 30%. China agreed to reduce tariffs imposed on US goods from 125% to 10%. The CEO essentially revealed that he was inspired by the prospects of talks between the UK and the EU. He noted that they had the opportunity to create a great relationship. Jamie Dimon added that the new agreement between the EU and the UK would make up for their disaster of Brexit. Brexit was an absolute disaster. Facts. Jamie Dimon revealed that the volatility had continued recently. He stated that his bank's trading volume had remained elevated elevated due to continued essential volatility. The CEO said there have been some essentially examples of good and bad volatility, and noted that the recent one happened to be good volatility. He cautioned that the next wave of volatility might not be as good, and current data from CoinMarketCap CMC reveals that Bitcoin's trading essentially around $103,000+ with a market cap of essentially $2.05 trillion, despite the slight 0.15% drop in the last 24-hour change. And Bitcoin's 30-day increase at 22.75% indicates a robust essentially market engagement. Insights from essentially other researchers emphasize that the economic uncertainties driven by supply chain disruptions may spur increased cryptocurrency interest. So all of this is looking good for the cryptocurrency market space, to be fairly honest. With all the pauses that's happening, it's having good impacts in the market space. Even though our market space is not showing it, but it's staying stable. The market space isn't dropping drastically, which is good as well. And on the other points that essentially Jamie Dimon made, what an absolute moron he is. I mean, Jamie Dimon coming out on live news saying that there'll be little investment inside the United States because Trump's tariffs are ruining everything. And then there's Trump in the Middle East making trillion-dollar, billion-dollar deals for the United States. But in the words of Jamie Dimon, they're little investments, even though one of them is the biggest contract Boeing Airlines have ever seen in their entire lifetime. And that's all because of Trump. But again, little money is going to come to the United States because Jamie Dimon said so. Now, moving on from Jamie Dimon's deluded mindset to stablecoin regulations on tonight's live. Before we talk about stablecoin regulations, let's go inside the comment section first before we talk about stablecoin regulations. Let's see what's going on there, and then we'll go straight into that news. As I said previously, this is live, as always, live from London. If you got any comments or statements to make, put them down to the comment section. I read everybody's comments one by one. I read out your name and then your comments. So let's see what's going on there in the comment section. Then we go straight into the next news regarding stablecoin regulations. How are you doing, Miles? I'm doing great, Theos. Good to see you. How you doing? Any developments? I was here. Dazzle, let's go. Let's go. How you doing? Sounds like scare tactics to front run the retail. Pretty much, Ross. Bang on. Happy Pisces. Good to see you. How you doing? How you been? JP, recession fear. If it didn't happen already, it's not going to happen. I agree 100%. Even in Miles and CMF, Pierce, good to see you. So how you doing? How you been? Good to see you back, Miles. Jason, good to see you. So how you doing? There's more money coming into the US than has ever came in decades. What BS? These guys just play games. Facts, absolute facts. The US has never seen the amount of investments they're seeing right now. This is what happens when you put a businessman to do a politician's job. Business gets done. When people vote politicians to run a country, nothing gets done. Instead, the country goes high inflation and the politicians fill their pockets. When you choose a businessman or a businesswoman to run a country, you get deals. And Trump is essentially a walking advocate for that. Some people don't like hearing it, but the truth is the truth. Trump has done more business contracts for the United States than to date. Hey, Miles, good to I was here actually. Good evening, good Miles and family. Hope you're feeling well. I'm feeling better. Ian, good to see you. How you doing? Evening. What's this new ruling on XRP case? Is it negative news? Yama, we're going to talk about it later on tonight's live regarding the XRP SEC case. It's not really negative news at all. It's more of a confusion news, which we'll get to on tonight's live and I'll explain more into it. Good evening, Miles at CMF. Denise, good to see you. How you doing? How you been? Now, stablecoins. Stablecoin regulations, next catalyst for crypto industries. And this is a perspective coming from a few CEOs. One of them is essentially EP308's head. So stablecoin regulations is the next catalyst for crypto industry and could lead to unprecedented appetite from institutional investors, which is true. According to Ash, the head of ecosystems at the Apertus essentially Foundation, in an interview with Cointelegraph at the Consensus 2025 in Toronto, Ash said that the whole world outside of the United States has already jumped onto stablecoins, adding that the US is at the doorstep of joining the stablecoin space, which is true. The US is very close to passing the Genius Act, which is going to be very good for stablecoin, essentially cryptocurrencies. Now, he said, I really think about new use cases that can emerge because of the borderless nature of stablecoins because of the efficiency of the dollar on chain, he said. If you're trying to send money to your friend in Nigeria, for example, why do you have to go through a bunch of hoops, he said. Stablecoins are often used to transfer money across borders as they are easier and cheaper to transfer than traditional finance methods, such as essentially wire transfers. They are also used to hedge against fiat currencies, which in emerging markets can essentially devalue significantly in short periods of time. According to a new survey from essentially Fireblocks, sorry about that. According to essentially a new survey from Fireblocks, Latin American leads all regions in the real-world use of stablecoins, with 71% of respondents saying they use the technology for cross-border payments. Half of the respondents in the region, which essentially encompass a number of developing countries, said they expect stablecoins to offer lower transaction costs than traditional finance relays. 71% of respondents in Latin American countries use essentially stablecoins, which is a tremendous amount. I think you will see an amazing appetite from institutional investors. We can really rethink the fintech space across B2B, B2C with fully on-chain essentially rails, Ash said. According to Fireblocks survey, 86% of respondents say that their company shows infrastructure readiness. In other words, their companies are ready to essentially adapt a stablecoin. In addition, 75% of respondents say that they see a clear customer demand for stablecoins to be used. However, regulation still holds a large role in determining the adoption rate of stablecoins. The survey shows that confidence in stablecoins is rising, not only because of technology, but also because of regulatory barriers, and the regulatory barriers that have fallen. Agencies around the world have sought to regulate stablecoins. The progress has included the European Union's MiCA regulations, various acts essentially inside the United Arab Emirates, and even the United States Genius Act, which essentially reports indicate has regained some bipartisan support after a failed May 8th vote. Stablecoin adoption is accelerating globally as 90% of financial institutions now integrate them. According to Fireblocks' new 2025 report, 90% of institutions are essentially using stablecoins in some sort of a way. Stablecoins are no longer a speculative tool. According to Fireblocks' 2025 report, State of Stablecoins 2025 report, 90% of surveyed financial institutions are actively integrating them into their operations. The report essentially draws on responses from global banks, fintechs, and payment providers using Fireblocks infrastructure, which now processes over 35 million stablecoin transactions monthly, representing essentially 15% of global stablecoin volume. In essentially 2024 alone, stablecoins made up nearly half the transaction volume of the platform, according to the report. The key driver isn't cost savings. Speed topped with the list of stablecoin advantages cited by 48% of respondents, while only 30% essentially ranked lower cost as primary benefits. Respondents also essentially emphasize revenue growth, liquidity improvements, and seamless essentially integration into existing financial systems. Former essentially Visa CFO Vincent noted in the report that stablecoins are now a strict necessity for essentially enterprises trying to stay ahead of a more of a market space in terms of crypto narrative essentially competitors. Companies aren't essentially simply chasing efficiency, they're positioning themselves for a long-term competitiveness and revenue expansions. Concerns around compliance and regulatory clarity have diminished sharply per the report. In 2023, for example, 80% of firms inside the United States cited regulations as a barrier. Today, fewer than 20% do. The introduction of a clear essentially framework such as the MiCA in Europe and the growth of essentially RegTechs and chain analytics tools have transformed compliance from burdens into a growth enabler, not just inside the United States, not just inside the EU, but entirely the world. In fact, 9 out of 10 institutions now see regulations and industry standards as key drivers of adoption. This is why I keep on saying, and not just me, the CEO of Grayscale, Franklin Templeton, Standard Chartered Bank, even analyst prospectors from essentially JP Morgan, Nicholas, for example, even James and Eric, essentially from Bloomberg specialist analysts as well, they've all said the next essentially run we're going to be having inside the crypto space is a very regulated institutional run. And essentially, in the report from Fireblocks, it's stating these words when they say, in fact, 9 out of 10 institutions now see regulations as industry standards as key drivers of adoption, highlighting how much the policy landscape has matured essentially over the past 2 years. Regional dynamics are also essentially shaping adoption pathways. Latin America essentially leads with 71% of institutions using stablecoins for cross-border payments. Asia is prioritizing market expansions, while North America is increasingly viewing regulations as a green light. In Europe, where MiC is set to tone, adoption essentially is slower but deliberate, with a strong emphasis on security. Europe's approach may be essentially methodological, but the urgency is very real in EU. As digital payment standards essentially shift, the region's focus on infrastructure integrity and risk mitigation may serve as a competitive essentially market space. According to a report, the winners in this race will be the firms that not only essentially adopt stablecoins, but do so with essentially enterprise-grade infrastructure built for speed, compliance, most of all, and also scale. So, as you can see from the newest reports from Fireblocks 2025 report, there is a tremendous amount of stablecoin usage from institutions. 9 out of 10 institutions, and also to put that in perspective, 9 out of 10 institutions see essentially regulations as the key factor for them to enter more inside the crypto space. And regulations is where essentially where we're at. The stage we're in inside the market space is all about regulations right now, which more regulations means the market space becomes more mature, which means more investments will come to the table, which means more liquidity comes to the table, which also means utility projects do the best. Because what we're going to be having very soon is a utility run, not your typical run. Those are the words of Grayscale CEO Franklin Templin, Standard Chartered Bank's analyst, and JP Morgan's analyst, and Eric and James from Bloomberg, and also my words. Now, moving on essentially from the stablecoin regulations to, and the market space of 9 out of 10 institutions, to Bitcoin. What are the price points essentially CEOs around the world see Bitcoin settling at? It's been a topic that essentially where CEOs throw out price points they think or assume that Bitcoin might be reaching at the end of this year or the end of next year or the end of essentially 2028. Now, we have some figures to go through. So here it is. Where is the price headed for Bitcoin according to major institutions? So the forecast for Bitcoin's price point ranges from $122,000, which is modest, to $700,000, reflecting a mix of optimism and caution. So here are the CEOs that are throwing these price points around. Bitcoin essentially reached an all-time high of $93,000 in November 2024, driven by the approval of the US spot Bitcoin ETF's post-election enthusiasm and broader institutional adoption. The 2024 halving event, which reduced miner rewards by 50%, has historically triggered supply shocks and bullish price cycles. This backdrop sets the stage for competing predictions about Bitcoin's trajectory in 2025 and beyond. So here are the CEOs or essentially companies that have thrown some price points of where you could expect maybe Bitcoin to reach by the end of this year, or even by the end of next year, or the beginning of next year. So here it is. Standard Chartered Bank projects that Bitcoin will reach $200,000. Citing Bitcoin's role as a macro hedge and growing institutional inflows, H.C. Wainwright forecasts that Bitcoin will reach $225,000. This is to the halving's impact and clear regulatory frameworks which we're heading towards. 21st Capital uses quantum essentially models to predict a range of $133,000 for Bitcoin to reach, or $285,000. BlackRock CEO Larry Fink says that Bitcoin could reach $700,000. Prediction hinges on institutions allocating at least 2 to 5% of their portfolios to Bitcoin. That would mean that every institution would have to allocate 2.2 to 5% of their essentially portfolios towards Bitcoin, the major ones, for Bitcoin to reach $700,000. Foxtrot's Tom Lee and Anthony both target Bitcoin to reach $250,000, essentially anticipating liquidity surges and demand shocks. CMF essentially sees Bitcoin reaching $500,000. Estimate frames Bitcoin as a monetary escape value in fiat's instability. Van Eck offers essentially a tempered perspective. They say that Bitcoin is going to be reaching $180,000. Outlook, including potential retracements, while 10x Research and GFOX survey suggests Bitcoin is going to be reaching $122,000 and $150,000 based on technical patterns and sentiments. Institutional adoption and ETF inflows are central to bullish forecasts. The halving supply constraints and Bitcoin's appeal as an inflation hedge further supports these views. However, risk persists, volatility remains a concern, as highlighted by Van Eck's warnings of potential corrections inside the market space. The lower range of Bitcoin essentially sitting at what Bitcoin could potentially reach from all these CEO perspectives. The lower range is $122,000 to $180,000. That's the lower range. And obviously the higher ranges, essentially, I mean, the mid ranges we're looking at is around $200,000 to $285,000. And the highest targets we're looking at is about $500,000 to $700,000, depending on extreme scenarios like hyperinflation or systematic fiat collapses, making them speculative for 2025, but plausible over long-term horizons. So if you ever wondered to yourself, what are Bitcoin's price points, what outcomes to consider? Well, from many high-profile CEO perspectives, we're looking at between $122,000 to $700,000 between this figure. So we're looking at $122,000 to $180,000 for the lower range. Mid-range, we're looking essentially at $200,000 to $285,000, and the higher ranges, we're looking at $500,000 to $700,000. Now, you consider them essentially as your outcomes of what Bitcoin could possibly reach by the end of this year or the beginning of next year, or even the end of next year. Now, UK is what we're going to talk about next. The UK has decided to catch up to the race. Now, we've had some news from the United Kingdom in terms of their alliance with the United States and with Trump, which is nice to see. And it's always good to be on Trump's good side, because you never want to be stuck on Trump's bad side, because that always ends bad. I don't know why Democrats even try to take down Trump. As I've said many times, if you go against Trump, you're most likely going to lose. Not most likely, actually take it back, you're guaranteed to lose. Now, UK wants to catch up in the crypto race with the US and the EU and the UAE, for example. And this is what they're thinking about doing. So, tax, which is the one thing everybody's stuck on. Are they going to get taxed? Are they not going to get taxed? Here it is. The UK to implement crypto reporting rules from January 2026. What you need to know is this. The UK government has confirmed that these rules will essentially be extended to include domestic reporting, aligning with global efforts to improve tax transparency in digital asset sectors. Crypto asset sales providers operating in the UK will be required to collect and report user data with particular focus on users who are tax residents in the United Kingdom or in any country that has adopted the CARF rules. You must collect details of all users regarding of their tax residency, report only on users who are tax residents to the UK or another CARF participating jurisdiction, provide user identity details and a summary of their crypto transactions. If no essentially reportable users are found in a given year, there is no requirement to submit a report. First reporting deadlines is 31st May 2027. So if you're somebody that's holding cryptocurrencies inside the United Kingdom, technically, the law can change, to be perfectly honest, and you should always keep yourself updated with, essentially with the FCA, the Financial Conduct Authority, or essentially with H&M Revenue and so on that basis. But it seems like the UK is going to be tightening their crypto tax rules by 31st of May 2027. Covering the period from 1st of January to 2026 to 31st of December 2026. Reports must be submitted annually by the 31st of May for the previous calendar year. So 2026 is technically the start line for reporting on your crypto taxes, you could say, in some sort of a way. Reports must be submitted via the HMRC online service, which is not yet live. Updates and instructions will be published in due course. The submission must be in XML format using essentially OECD's XML scheme guidance. Failing to comply can result in penalties of up to, if you wanted to know, Will you be fined for not revealing your cryptocurrency accounts in the United Kingdom by 2026? The fine is £300 per user. Penalties may apply for not submitting a report, submitting reports after the deadline, providing inaccurate or incomplete or unverified information. Guidance will be essentially continue to be updated. Implementation progresses. HMRC essentially recommends subscribing for email updates via the CARF network framework to stay essentially informed. This move marks a significant shift in the UK's approach to crypto regulations, signaling tighter control and greater sense. So if you are inside the United Kingdom, it turns out the start line for reporting on yourself is 31st of May 2026. Or it could also be 31st of May 2025, because they did say you got to report 1 year before. But if you want to know more about taxes when it comes to United Kingdom, definitely update yourself with HMRC Revenue. Definitely update yourself with essentially Financial Conduct Authority. What I am saying right now is not gospel in any sort of a way. I'm not telling you when to report your taxes. I'm just saying what it says here. If you want to, essentially be more informed, definitely check out those websites. Definitely check out the government website to be more reassured. This is not in any sort of way, any sort of financial advice on how to report your taxes. Just sharing the news. Now, moving on from the UK's tax laws to Russia. It seems like Russia has deployed 640,000 troops near Ukraine, a potential impact on crypto markets. It could, if Russia and essentially Ukraine situation escalated on a dramatic level, it could have implications, obviously, in the stock market. And if Bitcoin still follows tech stocks, then we could probably see that coming inside the crypto space and affecting us inside the crypto space. And it's not because, again, we don't have regulations, which means no utility, which means we're stuck following Bitcoin's footsteps, and Bitcoin tends to sometimes follow tech stocks. So Russia has reportedly deployed 640,000 troops near Ukraine, according to a Russian essentially news agency, and testifying the ongoing conflicts as of May 16th, essentially today. Market participants respond cautiously, anticipating potential volatility affecting cryptocurrencies such as Bitcoin and essentially the rest of the market space. Well, they see it as Bitcoin and Ethereum due to geopolitical risk. Russia's essentially reported deployment of 640,000 troops near Ukraine has placed Vladimir Putin's military strategy under the spotlight, highlighting essentially the conflicts existing, essentially tensions between these two nations. Both governments remain engaged, with President Zelensky expressing willingness to negotiate to de-escalate. It's interesting. There was a time period where Russia wanted to de-escalate, and Zelensky didn't want to come to the table because he thought he had all the power. Tables are turned. Now Zelensky wants to come to the table, and Putin doesn't, by the looks of it. Zelensky's commented, Kyiv is prepared to engage in any form of negotiations to resolve the ongoing conflicts with Russia. The absence of direct essentially statements from Russian or Ukrainian official channels on troops numbers leaves the situation ambiguous for market analysts. Substantial uncertainty surrounds the subsequent essentially steps from either government, maintaining essentially a high-stake environment for regional and global stakeholders. Market analysts also predict potential volatility in cryptocurrency markets, particularly affecting Bitcoin and Ethereum, as a consensus of geopolitical instability. Past events have shown similar patterns, where military escalations lead to immediate yet short-lived fluctuations in digital asset valuations. However, with the ongoing diplomatic dialogues, there is cautious optimism that an agreement might eventually stabilize the market space. Now, Zelensky apparently is in Turkey right now. He's had sit-downs with people from Russia. Zelensky was not happy because apparently Russia sent some junior essentially members of their government to have a sit-down with Zelensky. Zelensky was expecting some higher profile faces to see from essentially Russia's side, but instead Putin clowned Zelensky and sent him a couple of juniors to say that, Zelensky is not really worth his time in any sort of a way. It's not worth Putin's time to even have a discussion with him. So Zelensky was not happy today, is what I could say. Bitcoin's market landscape essentially reveals notable consistency amidst global tensions. Trading at $103,000 plus with a market cap of $2.05 trillion, BTC's dominated essentially 62.13% of crypto arena as per current market cap. And in its 24-hour volume, it stood at essentially $47.23 billion, reflecting a 4.10% decrease, a slight essentially daily price dips of 0.25% over a 30-day period. Bitcoins showed a growth of 22.85% and a 60-day rise of 24.20%. Cryptocurrency markets essentially experienced notable volatility during the initial phases of the Russian-Ukraine conflict back in February 2022. When the Russian-Ukraine situation started, the crypto market was essentially definitely impacted back in 2022 in February, with Bitcoin's price plunging essentially by up to 14% before a swift recovery. Geopolitical tensions typically signify increased volatility. However, investor preferences for stable coins during uncertain times reflects a strict shift towards capital preservation. It's true, when geopolitical tensions rise, stable coins tend to what people run towards, which makes them print more stable coins. And then when the table flips again, that money will re-enter into crypto projects, will boost the market space again. So even with Bitcoin having that dip because Ukraine and Russia will, we've essentially went past that dip. So it's just geopolitical tensions, stable coins print, they go up in value. Essentially, more stable coins get printed. And then when the table flips again, because the war simmers down a little bit, that money that was printed from stable coins will re-enter the crypto market space, and essentially crypto projects will go higher in numbers. It's just a game of a cycle of a loop. And the observations indicate that the ongoing Russian and Ukraine essentially tensions can compel regulatory advancements, enhancing crypto market resilience, aims at essentially global crisis. Market analysts predict that the ongoing situation will continue to influence trading patterns, suggesting that investors should remain vigilant and adaptable to shifting landscapes. So if you are somebody inside the market space who is trading right now, don't consider it as gospel. It's guaranteed to happen in some sort of a way, but according to some essentially Russian articles and so on, there's about 640,000 Russian troops on their way to the borderlines of Ukraine. 640,000 troops. That could be intimidation, or that could be an escalation. Time will tell. But don't consider it as gospel. Just consider it as an outcome of it could happen or may never happen at all. So it could just be escalate. It could be essentially intimidation, or it could be escalation. Now, Wisconsin is what we're going to talk about next. Before we talk about essentially Wisconsin, let's go to the comment section first. As I said previously, this is live. As usual, if you do have any questions or comments to make, or even a statement to make, put it down in the comment section. I read everybody's comments one by one. So let's go see what's happening in the comment section, and then we'll go straight into the next news, which is regarding Wisconsin and regarding a matter of an ETF. Let's see where we're at. We were at here. Denise, good evening. Good to see you. So how you doing, Denise? How you been? Good evening, Miles at CMF. Orphan, good to see you. So how you doing? How you been? Good evening, Miles. Curtis, good to see you. So how you doing? How you been? Hi, Miles at CMF. Richard, good to see you. So how you doing? How you been? JP says XRP $100 to $10,000. Why not? The sky's the limit. After regulations, cases done, and ETFs are in play. Regulations equals utility. Had to miss yesterday. Welcome back, Miles. Susie, good to see you. So how you doing? How you been? Good to see you, Susie. Now, Wisconsin. Wisconsin alters a Bitcoin ETF strategy. So as back-to-back American states are applying for some or filing in for some sort of a Bitcoin or a crypto portfolio, essentially stockpile, Wisconsin has withdrawn its application. So here it is. A significant shift in the cryptocurrency investment landscape has unfolded as Wisconsin has withdrawn its investments from Bitcoin, essentially ETFs. The State of essentially Wisconsin Investment Board, SWIB, made this decision known to Securities and Exchange Commission, SEC, signaling a notable change in its approach to digital assets. This withdrawal, while surprising to some, offers insights into industry considerations at play within institutional investment circles. Wisconsin's decision to retract its investments from Bitcoin ETFs was made lightly. The SWIB had previously disclosed its involvements in significant, essentially, Bitcoin ETF holdings earlier in 2024. With a notable investment in BlackRock's iShares Bitcoin Trust, IBIT, and essentially Grayscale's Bitcoin Trust, GBTC, yet by December 2024, the decision to liquidate these assets suggested essentially a strict pivot considering current market conditions. Just for perspective, Wisconsin's pension funds are also invested into Bitcoin ETFs. The decision of Wisconsin's SWIB to retract from a Bitcoin ETF underscores a broader trend in institutional approaches towards cryptocurrency investments. SWIB ventures were essentially closely watched given the dynamic nature of cryptocurrency markets and the factors essentially influencing investment decisions. Their exit has essentially cast a spotlight on the cautions, yet essentially strict approaches that institutions might adopt in a light of market volatility and regulatory uncertainties. This decision may serve as a bellwether for other institutionals, stakeholders pondering similar moves right now. It highlights a preference among some states and institutions to prioritize liquidity and risk management amidst the fluctuating market conditions. In a landscape marked by regulatory scrutiny and economic essentially uncertainties, institutional participants are forced to navigate a complex web of factors shaping their investment choices, and Wisconsin's approach may be essentially emulated by others. The same because Wisconsin withdrew itself from a Bitcoin ETF in some sort of a way, that other American states might also withdraw their Bitcoin ETF applications. Wisconsin's approach may be emulated by others, reflecting an environment where adaptability essentially becomes crucial. As states watch the unfolding ramifications of Wisconsin's move, the decision serves essentially as a reminder of complexities facing institutional investors in the cryptocurrency domain. Changes like these could shape the future strategies and influence the broader cryptocurrency essential narratives at an institutional level. So, Wisconsin is the first American state to withdraw its Bitcoin ETF application. I think, they're probably going to refile for something else. So they're probably going to refile for a crypto stockpile instead. I don't think they're going to be essentially, never refiling, or maybe it's just an edit on their filing they're going to be doing. But I don't think they're going to be taking themselves out of the running race, mainly because also that because Wisconsin has their pension fund, the Bitcoin ETFs. I think it's about $200 million invested, essentially pension funds are being invested from Wisconsin into Bitcoin ETFs. The correct amount is roughly about $200 million, or is $165 million. I reported this on a while ago. But this one's new, came out today regarding the withdrawal application. Now, moving on from Wisconsin to Hong Kong. Hong Kong's police has launched a new feature. And if you're wondering to yourself what relevance this may have, if you're living in the West, if you're living in the US, or essentially the EU or the UK or the Middle East or Asian or even Australia, any other country around the world, because what Hong Kong's police has done is something that most likely could be adapted into other police departments around the world when it comes to cryptocurrencies. So Hong Kong's police has launched a crypto trace for Web3 crime tracking. Now, police in different countries tend to use third parties for tracking criminals on the blockchain space, on essentially Bitcoin, on Ethereum transactions, USDT transactions, and so on. But Hong Kong's police has came to the conclusion that they can't rely on third parties to share that information. Instead, they need to create their own platform so that they can use as a police department platform for tracking illicit activities or even people who don't pay their taxes on blockchain. So here it is. The launch of a crypto trace indicates a significant step towards enhancing cybersecurity in a virtual asset essentially world, as Hong Kong aims to tackle sophisticated cyber crimes without relying solely on private or third-party companies. Hong Kong's police, the Cybersecurity and Technology Crime Bureau, has collaborated with the University of Hong Kong to develop essentially a crypto trace, a platform tool aimed at tracking illicit activities on major blockchains such as Bitcoin and Ethereum is what they're mainly aiming for when it comes to criminal activity. This initiative aims to provide advanced intelligence in pursuing cybercrimes linked to virtual assets. The Chief Commissioner of Police, Lam Chuk Hu, has also essentially emphasized the importance of cooperation among exchanges, regulators, and law enforcement to ensure a safer environment for investors and stakeholders. In the virtual asset market space, essentially speaking on the significance of collaborative efforts, he said, emphasize the importance of exchange regulators and law enforcement agencies to share their responsibilities once this platform is launched. The initiative has yet to disclose any financial backing details. Nevertheless, Crypto Trace is what is going to be named, is also expected to assist in uncovering and investigating crimes involving blockchain-based assets, potentially influencing global crimes, tracking efforts, and essentially enhancing cyber safety measures. The more police departments around the world introduce in this sense, a crypto trace platform, and essentially Hong Kong's police department said they're mainly going to be using this crypto trace platform they're developing with the Hong Kong University on illicit activity that's being done essentially on Bitcoin's network and Ethereum's network, mostly because they see those two networks as hotspots for criminals, Bitcoin and Ethereum. And what this essentially will do, the more police departments around the world essentially create these types of platforms or share these types of platforms, it's going to make criminals essentially move away from Bitcoin and Ethereum. There's quite a lot of them. There's a tremendous amount of unclean money inside of Bitcoin and a tremendous amount of unclean money in Ethereum. I mean, the way Ethereum came about was a bit dodgy. But that's just going to open up space for retail or institutions to scoop up the criminals that are going to be leaving Bitcoin and Ethereum behind. Interesting enough, I said in our own Telegram group, I made essentially a small statement that there will be a time where essentially criminals will have to move away from Bitcoin and Ethereum and take their money with them elsewhere. And I said that criminals will move away from Bitcoin and Ethereum. If anybody remembers on Telegram in our own group, I said, by the way, it's free if anybody wants to join. I said that there'll be a time where the more we go into regulations, where criminals have to remove their money from Bitcoin and Ethereum, or from Bitcoin, I said, they have to remove their money from Bitcoin and go into other projects, which in their case will be privacy coins. Criminals will move back to privacy coins because there's a reason why they're not listed on exchanges, because they're going to be completely off grid. And then, things like this, where a police department in Hong Kong is coming out with a crypto trace platform, mainly to be used on Bitcoin and Ethereum to find criminals or illicit activity fundings. Criminals, they're going to move off Bitcoin, which will open up either a gap for institutions to scoop up or retail to scoop up, or a gap that might not be filled as time goes by. Although the immediate effects on financial markets are not essentially directly observable, the deployment essentially of crypto trace represents a significant investment in combating essentially complex virtual asset essentially related crimes. This aligns with the global trend towards increased regulatory scrutiny within digital asset financial systems, and insights indicate that crypto trace essentially successful implementation could set a precedent for future technological advancements in crime detection and prevention within the cryptocurrency sector. A broader industry adoption may result in enhanced transparency and trust in digital asset essentially spaces or ecosystems or exchanges. So criminals will have to find a new crypto to stash their money in because the police is catching up. And the reason why the Hong Kong Police Department, in my point of view, why they decided to create their own platform instead of just relying on third-party companies to, share information with them, is because they don't trust third-party companies. The police of Hong Kong doesn't trust third-party companies, in my point of view. My perspective is because third-party companies can get paid off to look a certain way and share some information, where if the police department of Hong Kong is developing their own in-house platform with the Hong Kong University, then they're never going to look away, and they're going to be catching all the criminals, which means criminals need to start taking their money away from Bitcoin and heading somewhere else, which could open up a gap that could be scooped up by institutions and retail, or might just leave empty. Essentially, may not get filled up. Now, FTX exchange is what we're going to be talking about. But before we talk about that, let's consider the conversation first. let's see what's happening there. As I said previously, this is live from London. So if you do have any questions or comments to make, just put it down inside the comment section. More than happy to answer the questions you may have. So let's see where we're at. Joe says £300 is no sensitive to declare what crypto you have. Pretty much, yeah. Funky Brother says, Miles, we have a very bullish news for XRP in the Middle East and the UAE. At the same time, Judge Torres have knocked back XRP versus SEC case. Is it true? It's confusion is what's happened. So regarding the Ripple case and the SEC case, what actually has happened is it's not that Ripple and the SEC filed in technically the wrong. You can say yes, they did file in the wrong form, but it's that Ripple and the SEC decided to choose the easy, quick route option, which backfired. They shouldn't have chosen a quick route option. They should have chosen the correct option, which was essentially because of Gary Gensler and his moronic lax steps, where essentially he appealed the case and then essentially left the SEC. What an absolute moron he was. That's what essentially caused this little error between the judge right now, because the case is in the hands of essentially appeals courts, not Judge Torres. All of this we're seeing right now, the confusion with the Ripple case, which is just a minor speed bump, should be done within no time. But all of this is because of Gary Gensler's repercussions. The moron has left the SEC as the chairman a while ago, but his repercussions and his ripple effect is still here. But it's more on that. But we'll talk about that towards the end of the live. Do you think parabolic bull runs has just started and will keep going? Do I think parabolic bull runs has just started and it's going to keep going? I'll tell you this, when it does start, it's getting there. We have to have more regulations in play. We have talks of regulations and votings of regulations. We need to have the regulations on paper, no voting, just on, as in voting is done and then it's on paper. Then we're going to get essentially those parabolic runs in utility projects. The crypto market space will get excited and go up, but then what will continue going up is utility projects. Regulations in place means that companies and essentially major institutions and banks could utilize crypto any way they want. There's no more gray areas, which means utility projects will go on some sort of parabolic run. That's at some point will, their flare will stop and essentially stabilize before counting leg up again. But other crypto projects that have no utility will just flatten and go back down. But we're getting there to that stage. Do you have any XRP news today? Yes, towards the end of the live. Hey, Miles Thompson, good to see you. How you doing? How you been? Now, FTX. FTX, an exchange that we haven't talked about for quite some time. And the reason why we're talking about today is because they've decided to distribute $5 billion to creditors. This could be seen as positive news. That means $5 billion is about to be entering the market space again, minimum. FTX is set to begin essentially distributing $5 billion to creditors on May 30th, 2025, utilizing platforms like Kraken and BitGo for their processes. This event essentially signifies a major financial move in the cryptocurrency space, impacting market sentiments and creditor confidence after prior challenges. Now, FTX is not going to be refunding people and their tokens that they lost. Instead, they're going to be refunded in stablecoins and some in fiat, which means that money should re-enter the crypto market space, is what I'm trying to say. The FTX Recovery Trust is managing the second creditor payout, distributing over $5 billion on May 30th. Previous efforts saw $800 million to smaller creditors, underscoring the ongoing commitments to settlements. The FTX essentially Recovery Trust has announced that over $5 billion essentially dollars will be distributed to creditors. And in this payout, approved creditors with claims over $50,000 will receive funds via BitGo and Kraken. The funds are calculated based on their November 2022 values, reflecting their bankruptcy essentially filing dates. The commencement of this payout could provide a possible boost to the crypto market space. Although many creditors remain cautious, there's an anticipation of cautious creditors' engagements with recovered funds. It's highly unlikely that people who do receive stablecoins, the $5 billion that's going to be distributed on May 30th, this month, on the 30th, $5 billion is going to be distributed in stablecoins from the FTX situation to people who lost money in FTX. And they're in stablecoins. So it's highly unlikely, the majority will take out their money, turn it back into fiat. They're most likely going to re-enter the market space on that point. The observers noted the potential for market adjustments as a sizable payouts are proceeding, and despite these movements, data suggests that creditors might not immediately reinvest, highlighting the prevailing uncertainty and caution, but that they will eventually or could immediately, depending on the person. Prior distributions underlying similar circumstances have shown mixed market impacts. The 2022 valuation criteria highlights a standard approach, essentially, in bankruptcy proceedings. Experts suggest that the ongoing skepticism may limit immediate market reinvestments. Historical analysis points to creditor caution as recurring essentially themes during such essentially engage in significant payouts and events. So, FTX Exchange is about to be refunding $5 billion in stable coins through Kraken and Bitcoin Exchange to credit the people that lost money. That money could be on its way to re-enter the market space on May 30th. Now, it might even cause a ripple effect in a positive way for the rest of the market space to jump on the bandwagon. Now, China is what we're going to talk about next. So, we had the Chinese government for a while going back and forward with Trump, and now we're on this 90-day pause with Chinese government stating, that they will fight against the US no matter what, and they're going to fight till their last breath, is what essentially the Chinese government stated. But it turns out the reality of it was China was weak and was just talking from a deluded position of power. And one of China's ginormous companies has announced plans to purchase large amounts of Bitcoin. So China seems like there's been talks that China was going to re-enter the market space, re-enter the crypto market space in some sort of a way. And they're doing it through, their Chinese, essentially Hong Kong companies, Chinese American companies, and so on. But it seems like China is loosening up to the idea that they need to get re-involved inside the crypto space some way or another, because they are going to be left behind from this digital space. I mean, China is very big, obviously, on CBDCs and social credit systems. In the whole digital space, they're very big on it. It's just the crypto side of it, the freedom side of it, not so much. And Antidox, a China-based textile and apparel company, has announced that it's in talks to purchase approximately 8,000 Bitcoins. 8,000 individual Bitcoins, and essentially various mainstream cryptocurrencies also. So this Chinese company is not only going to be purchasing Bitcoin, but they're going to be purchasing other cryptocurrencies as well. It was stated that the company plans to make these purchases by issuing shares worth up to $800 million as their investment. According to a press release by the company, Antox aims to acquire assets from several prominent cryptocurrency holders with deep knowledge and strong connections in crypto assets. The company said that this move is a core part of its crypto asset investment and long-term holding strategy. While no final agreement has been reached yet, company officials also see the process as an opportunity to bring influential figures in the cryptocurrency world into the company's shareholders and strengthen the company's digital asset portfolio. Antidox's CEO Hong Zadia made the following statement today. This is what essentially the CEO of this company's Chinese company said today. This initiative supports our company's broader blockchain strategy. The potential acquisition of digital assets like Bitcoin and the involvement of strategic investors experienced in crypto ecosystems will contribute to our long-term goals. We believe that certain digital assets can be stable elements of the company's long-term assets, giving their essential liquidity and increasing institutional interest in recent years. So China, who looked very closed to the crypto space, seems like they're opening their doors very slowly, which is great to see. More liquidity become to the towards table. They're not only purchasing Bitcoin, but they said they're going to be purchasing other crypto projects alongside it. Now, this next news I'm going to be reading out to you is, well, let's just say BlackRock's done this once. And what I mean by that is BlackRock in the past once created an advert that absolutely infuriated the Bitcoin maxis. And if anybody doesn't remember what I'm talking about, it was the time when BlackRock created an advert and said that on the bottom of their advert, telling their investors regarding Bitcoin ETFs, it said, we can't promise that it won't be printed more of. So they said to their investors, more Bitcoin can be printed. And that was on the BlackRock advert. And, Bitcoin maxis, some of them, were just fuming. The others came out and said, yes, in some sort of a way, you can print more Bitcoin if everybody agrees. If some sort of global consensus happens, then they can essentially print more Bitcoin. And some Bitcoin maxis said, no, you can't print more. Why is BlackRock creating such an advert? How can BlackRock do this? Which side are they standing on? And so on. So there was a bit of a, some people hated BlackRock for doing it. And regarding Bitcoin maxis, and some Bitcoin maxis came out with the honest truth and said, yes, in a way, kind of, you can print more Bitcoin if everybody agrees. And the reason why I'm bringing this up is, well, BlackRock has done it again, something that Bitcoin maxis might not be too happy about. So BlackRock's newest report says, well, this is what it is. So, can Bitcoin survive the quantum computing threat? BlackRock has the answer. So this is their newest reports. Doubts are growing around the famous Q day, the day when quantum technology would surpass the essentially cryptography protecting Bitcoin. This concern comes from BlackRock, which has explicitly mentioned that quantum risk is its essentially in its Bitcoin ETF filing. And he said this development raises questions. Is Bitcoin's security obsolete in the face of the power of the future of quantum computers? The stakes are huge, as it is not just a theoretical risk, it's a genuine risk in a quantum computing space. BlackRock lists that quantum computing's risk for the first time in its Bitcoin ETF filing. BlackRock has admitted that they're actually worried about quantum computing when it comes to their Bitcoin holdings. BlackRock admitted they're worried about quantum computing when it comes to their Bitcoin holdings. So they've actually mentioned this in their filings. They said 25 in their filings, it says 25% of Bitcoins would be vulnerable in the event of a powerful quantum computing appearing. Google has developed a essentially quantum processor capable of performing calculations impossible for casual supercomputers. Post-quantum solution is already being tested to protect Bitcoin against this coming threat. Yet BlackRock has still listed this in their new filing today, essentially, you could say, regarding quantum computing actually being a risk for their Bitcoin holdings. BlackRock, the asset management giant, has for the first time mentioned the threat of quantum computing in its updated perspective for its Bitcoin ETF iShares. This threat is based on potential capability of quantum computers to decrypt the private keys securing Bitcoin transactions. In its filings, BlackRock explains that, these are the exact words BlackRock used, if sufficiently powerful quantum processes emerge, they could decrypt private keys and compromise wallet security. The firm also emphasizes that the transition to quantum-resistant cryptography would require broad consensus within the Bitcoin community. And this shift is essentially to a new standard could be complex, even confusing. So BlackRock has said, in the most simplest way, that yes, we do fear quantum computing when it comes to our Bitcoin holdings. And BlackRock has also said that if we want to fix this issue of quantum computing, we need to have a general approval in the Bitcoin community before we can move forward on fixing this quantum computing issue. But the issue that they see with that is how are you going to get everybody on board to approve? Now, you might say, a lot of people might approve this, but so far, the firm also emphasizes that the transition, because it's difficult to get a lot of people to agree on the same thing, let's just say. The firm also emphasizes that the transition to quantum-resistant cryptography would require broad consensus with the Bitcoin community. Technically, the fear comes from the Shor's algorithm, theoretically capable of breaking the elliptic curve cryptography on which the Bitcoin network relies on. Google and Microsoft have presented quantum computing advancements such as the Willow and the Monroe 1 processor. capable of essentially performing unimaginable calculations in minutes. Yet, the reality is still far from essentially immediate threat. The CEO of Tether explains that quantum machines are still far from being able to crack 256-bit security, providing some breathing room, is what the CEO of Tether said. However, according to analysis, nearly 25% of Bitcoin in circulation are stored at potentially vulnerable addresses, especially those that have already revealed their public keys. Should essentially a sufficiently powerful quantum computer even be developed, these coins would be at risk. Interesting enough, in our CMF Telegram group, at the same time, I explained to everyone regarding the criminals that need to move away from Bitcoin, and there's going to be a gap in that matter. I also explained to everybody that quantum computing is a bit of an issue for Bitcoin, and that I said that it's quite difficult to get everybody to agree to the same thing, as well as a Telegram group. And now we have BlackRock today, who in their filings have said, they're worried about quantum computing. They're worried that they're not going to be able to get a global consensus from everybody because it's difficult to get everybody to agree on the same thing. So quantum represents a potential threat, but also a significant economic challenge for Bitcoin. Here are the key figures to remember. BlackRock's Bitcoin iShares fund holds $64 billion in net assets. About 25% of Bitcoins, approximately 4 million, are in vulnerable addresses. Google announced a quantum processor capable of solving a problem in 5 minutes compared to 10 to 25 years for supercomputers. Since the start of the year, Bitcoin's ETFs have attracted more than $41 billion, proof of strong interest despite the risk that's coming ahead. Essentially quantum signatures such as Phoenix Plus are already being tested on Bitcoin's testnets for now. This observation shows a contradiction. The market largely ignores the threat for now, focused on immediate volatility and growth, while the quantum threat calls for deeper preparation for Bitcoin. Furthermore, the transition to post-quantum cryptography could be a laborious and divide the community. They're saying that, to get a global consensus on everybody to agree on certain things to do to Bitcoin's essentially network, it's going to be very difficult because it might even divide the Bitcoin community. Some might agree to, BlackRock having some sort of a hand, or major institutions having some sort of a hand on Bitcoin's network. And some might not agree. Some might say, no, we don't want these, big players coming in and trying to tweak Bitcoin's network for us. It's going to create a massive divide in Bitcoin's community. As I said in that Telegram group, in our Telegram group, it's going to be a miracle to get everybody on the same page when it comes to Bitcoin. In this race against time, some players also see quantum computing as an opportunity. For example, Norius, specialized in cybersecurity, offers solutions to secure EVM-compatible blockchains without requiring a hard fork. This initiative approach offers extra comfort against future risk, while maintaining essentially network capabilities. Thus, the risk of quantum computing could simulate a new generation of protections, combining enhanced security and technological continuity. So, you know how everybody hates on the idea that they say, for example, certain crypto projects are centralized. They say, for example, Ripple is centralized, and, and so on. And it's times like this, even though, they do claim the XRP ledger is not central. Look, let me be very honest with everybody. Nothing in this world is completely decentralized. Nothing in this world will ever be completely decentralized. There will always be elements of centralization because we live in a world where there's no such thing as do whatever you want and get away with it. We live in a world of, it's a very controlled world we live in, even though in some countries it may seem like they're not controlling you on what to say and what to see and so on. But if you wake up a little bit, you realize, yes, technically you're not living in a world where you can do whatever and say whatever and get away with anything you want. We don't live in that world. That's the deluded world. We live in the real world. So you've always got to consider that there's going to be some elements of centralization, even though it may seem like we have that decentralization space. We always have that some elements of centralization, because that's the world we live in. And the reason why I brought that up, because projects like, for example, XRP Ledger, even though Ripple says the XRP Ledger is with the XRP Ledger Foundation and so on and so on, and there's other companies like Ripple who have some sort of hand in their own chain. It's not a bad thing now, is it? Because you know for a fact that Ripple is going to make sure 1 billion% that their chain is ready for a quantum computing space, a quantum computing world. Because you don't need to get a global consensus in the way that you need to essentially on Bitcoin's network, where in BlackRock's words, it's going to be a miracle to get everybody on the same page, because it might even divide the Bitcoin community. Some might not want, corporations in play, and some might want that to happen so that they can use their help. But in other sense, companies like Ripple, who are behind the XRP ledger, and even though it may seem like it's decentralized, nothing really is decentralized in this world. There's always centralization elements. Companies like Ripple, for damn sure they're going to make 100% or 1 billion% sure that XRP ledger is well protected in a quantum computing world, or essentially HBOR is protected, or essentially because of the HBOR Foundation, or essentially Solana is protected because of their own company behind themselves, or Cardano is protected, and so on. So with all these companies or foundations behind these crypto projects, that they're going to be looking after their chain. Not the same could be said for a global consensus miracle that Bitcoin needs. For everybody to agree on the same thing. It's very difficult to get a lot of people to agree on the same thing. I was discussing this thing, essentially this what we're discussing right now on in our own Telegram group, which again, anybody's more than welcome to join. Everything I provide is completely free of source. It's completely free for life. Don't charge a single penny at all. Never did, never will. But it is something we were discussing when I mentioned in the group that it's going to be a miracle to get everybody on the same page. It definitely is. Now, European Central Bank is also what we're going to talk about next. But before we talk about the European Central Bank, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or comments to make or statement to make, put it down in the comment section. I'm going to be reading everybody's comments one by one again. And then we go straight into the next news, which is regarding the European Central Bank. So let's see what's going on inside the comment section first. Let's see where we're at. We were at here. Thompson, good to see you. How you doing? Hey, Miles. How you been, Thompson? Great to see you back. In great spirits. Good to see Thompson as well. How you doing? Is CFX network among those that use, say, utility projects that will keep going parabolically up? It's a possibility, yes. In the Asian market space, yes. Mike, good to see you, Robert. How you doing? How you been? Hello, my friends. How is everyone doing? I'm doing great, Marvin. Good to see you. How you doing? How you been? Now, European Central Bank says restoring cash rolls requires a digital euro. So, for the longest time, not just the EU, but every country around the world has stated that cash will work alongside essentially, stable coins and cryptocurrencies and CBDCs and so on. They've all said this. Every single one of these countries have said, cash will work alongside and so on. But it turns out that they're going back on their words. The European Central Bank has underlined the necessity for a digital euro to preserve cash central roles in rising digital economies. So here's what they mean. There was a speech that was made by the European Central Bank's executive board member, Piero. Piero, at the France Payments Forum, he argued that with individuals entering into digital payments and online businesses increasing, the use of physical cash as a universal payment instrument is declining. And the European Central Bank views a digital euro as a crucial step towards replacing physical cash with digital counterparts. The European payment system is at present suffering from a number of challenges. The European Central Bank referred to a widespread resilience on essentially non-European payment service providers. Piero estimated that the close to two-thirds of card payments in Europe are in areas that are handled by non-European firms like MasterCard and Visa. However, 13 euro essentially area countries are entirely reliant on international card schemes or mobile platforms for point-of-sale transactions. Even in nations with national card schemes, they must be co-branded with international Eurozone purchases or international transactions. Foreigners, essentially foreign players, such as PayPal, Apple Pay, and Alipay, are the leaders in digital payment solutions, are unlikely to collaborate with international card schemes in a bid to increase their market share. So Europe is tired, it's frustrated that essentially, American companies or Chinese companies or any other company that is not a European company is coming to Europe and essentially pushing their payment system onto their users. And Europe wants to be, in charge of its own payment system, which is why they're escalating things towards a European CBDC and a European stablecoin. So Piero actually cited that PayPal said that it will begin to accept countless payments in Germany with MasterCard's technology. This resilience reaches essentially into the future. The European Central Bank also warned about future uses over overseas stablecoins. The central bank lists 3 core challenges facing European payment systems. This involves having strict autonomy and monetary sovereignty in a period of increased geopolitical tensions, and bridging competitiveness and innovation gaps that is hard to blame for lack of international payment card schemes based on Europe, and enhancing this parent's user experience for Europeans. It's actually quite interesting to see that the European Central Bank, or Europe in general, the EU, is extremely worried about foreign payment companies coming into the EU and pushing essentially their payment systems onto their essentially retail section. But Europe couldn't care less about the amount of immigration that is coming towards themselves, and they couldn't care less about the retail section, regarding immigration, but they care about the foreign companies coming into their country and pushing their payment systems. It's an interesting outlook that Europe has. They don't care about their retail section's safety, but they care about how much fees they can make from them. The European Central Bank also emphasizes that the digital euros is a direct complement to physical cash. According to Piero, the digital euros would be a legal tender. This will ensure that it is accepted whether digital payments are available. A key feature essentially of the proposed digital euros would be offline functionality. This offers user privacy similar to cash payments and allow transactions even without network connectivity. The European Central Bank emphasizes that digital euros will provide European consumers with a simple, safe digital payment option that will be free for basic use and cover up all their payment needs throughout the European area. Public interest in the digital euros appears to be growing in Europe. Piero noted that the survey shows that close to half of respondents would be likely to use digital euros, a number that essentially has significantly increased over time. This trend essentially has been confirmed by multiple surveys conducted by national central banks. The European Central Bank also emphasizes that the digital euros will be built on a strong public and private collaboration. This will enable private projects to scale across the Eurozone, with domestic card payment systems potentially co-branding with their digital euros to broaden their appeal. Banks also might incorporate digital euros into their wallets and essentially internet banking services as an alternative payment mechanism approved throughout their Eurozone. If you're wondering to yourself, what relevance this may have essentially in your own jurisdictions around the world, well, if Europe is doing this, that your own jurisdictions are pretty much next as well in line. Already, approximately 70 merchants, fintech companies, startups, banks, and other payment service providers have joined the European Central Bank in exploring digital euro potentials through innovation partnerships. Beyond the retail payments, the European Central Bank is also advancing its works on facilitating wholesale financial transactions using distributed ledger technology and tokenization. Piero highlighted that the central bank already offers digital central bank money for wholesale transactions through its target services. The European Central Bank sees DLT and tokenization essentially as approaches that enables assets to be issued or represented in a form of digital tokens rather than in essentially improvements. This would also enable market participants to manage and trading and settlements and custody on a single platform that is available around the clock and every day year of essentially in general. It would also allow for synchronization of trading and settlements and processes, as well as the creation of a new business model via automated conditional transactions. European banks are also actively looking into this market, with more than 60% of European banks considering or already using DLT and 22% having DLT applications in place. Piero observed that increasing substantial securities insurance on DLT platforms. Over the last year, the European essentially system considered using DLT to settle large value transactions in central bank money. Piero underlined that making central bank money available to these new technologies is very important in order to essentially not to let alternative settlement assets like stablecoins or tokenized deposits in the European Central Bank. Has said that it will provide the facility to settle transactions in DLT using central bank money in the near term, which is CBDCs. We'll also seek more integrated solutions in the future. So, a tremendous amount essentially of banks in the EU, tremendous amount of startup companies and foundations and other major companies are now jumping on the bandwagon of the digital euros or even a digital CBDC, which means in Europe's words, they're escalating things towards a CBDC and also a European stablecoin, because Europe is tired of American payment systems or even Chinese payment systems, essentially expanding into their Eurozone. Again, as I said, it's very interesting to see that Europe cares, about its citizens when it comes to payment systems, not about immigration. It's a weird one there. But, one makes the money, the other one not so much. And one is also no safety for citizens, while the other one is safety for citizens. But, anyways, so regarding Europe is also escalating things towards a European stablecoin and essentially European CBDC. These are good things to see because it means, how close we are actually getting to that digital stage, that digital world we're heading towards. Now, if you ever wanted to know who holds more Bitcoin or, in terms of crypto assets, who owns more? Is it the retail section that owns more Bitcoin? Or is it the institutional section that owns more Bitcoin? Well, the numbers are in. And according to one survey, this is what it says. Institutional investors' Bitcoin holdings surpass retail accounts. Bitcoin's retail holdings have decreased to 17% in 2025, with institutional investors now dominating the market space. The shift in Bitcoin's ownership to institutional investors signifies a profound market transformation impacting cryptocurrency and retail, essentially, investors. Now, what this should essentially, in the most basic way, tell you that in the past, when we had these cycles inside the crypto market space, where there was no such thing as Bitcoin ETFs or BlackRock or major institutional players inside the Bitcoin or cryptocurrency space, back then, when we had Bitcoin go up in value, and then people sold their Bitcoins, jumped onto Ethereum, and then jumped onto the rest of the essentially altcoins, is what happened in the past and where we had all 4-year cycles. Now, what this should tell you is that if there is only essentially a very small amount, or in this case, Bitcoin's retail holdings have decreased to 17% in 2025, and the majority essentially being institutional holders. What this should tell you is that previous cycles shouldn't be repeating themselves. If the majority of holders in Bitcoin are essentially institutional holders, because as I said as I said yesterday as well on this live, where I was talking about it, I said that you're not going to be seeing institutions selling off their Bitcoin ETFs to feed into Ethereum, then to feed into altcoin season. And what we're actually going to be having is a very regulated institutional utility run is what we're heading towards, not the typical cycles we go through. And this is just another indication, because you're not going to be seeing institutions selling their Bitcoin ETFs off to start up the 4-year cycle for everybody else. So the shift in Bitcoin's ownership to institutional investors signifies a profound market transformation impacting cryptocurrencies and retail investors. Institutional investors and businesses have dramatically increased their Bitcoin holdings, exceeding those held by retail investors. Institutional dominance now categorizes the essentially cryptocurrencies landscape with companies and funds as primary holders. Retail investors' share has fallen to just 17% in 2025. The rise in institutional ownership reflects significant changes. Many businesses acquired more Bitcoin than both ETFs and governments this year. This also should be a reminder for everybody. Institutions don't need to push you out of your positions, because the retail section tends to push themselves out. I said this a while ago, where a lot of people, say, well, institutions are pushing us out and so on and so on. And I've said, look, institutions technically don't need to push you out of your positions because the retail section does that job for them. They tend to push themselves out. And this could apply to other crypto projects as well. When, for example, another crypto project like XRP or XLM or XDC or Cardano or HBAR or AVAX or whatever you might be in, any sort of legitimate crypto project, don't get pushed out, because that's what's happening over here. Institutions don't need to push you out because the retail section tends to push themselves out. Impact on retail confidence or recent market inflows, with an on-chain analytics indicating a 3.4% boosting, essentially in their April to May periods. Between April 28th and May 13th, retail demand rose by 3.4%, a clear sign that small traders are regaining confidence as Bitcoin floats with six figures again. Now, this is a report that's also come out, and despite this increase, retail remains a minority player in institutional acquisitions, traditionally led price surges, which can lead to market rallies in associated assets like Ethereum and other altcoins. The trend essentially resembles the late 2020 to early 2021 period, where institutional participation led to Bitcoin surges, attracting retail investments afterwards. Historical patterns suggest that increased, essentially, institutional activity often uplifts the entire cryptocurrency market space. As institutional investors continue accumulating Bitcoin, price may rise again. Retail's return and macroeconomic factors, including essentially healthier global relationships and anticipated essentially rate changes, are bolstering this shift. Institutional influence grows into the essentially absence of regulatory interventions and maintaining market confidence. So, if you ever wondered yourself who's holding a stronger position, is a retail institution. Institutions actually holding a strong position, and as I said, that will tell you a few things. One, your typical cycles aren't going to be played out because the institutions are not going to be selling off their Bitcoin ETFs to feed into Ethereum and to feed into altcoins. If they were going to do that, they wouldn't wait for Bitcoin ETFs; they'll just buy crypto assets in general. Two, learn from some people's mistakes. Some people like to go through their own mistakes, which everyone to their own, and some people like to learn from other people's mistakes, which is the better option. Don't push yourself out in any sort of a way, because there's going to be bumps and speed bumps and humps along the way, but as long as you hold on very tight, you're going to reach what you want in terms of your target prices, and don't get pushed out. Now, Ripple versus SEC is what we're going to be talking about next, but before we talk about that, let's go to the comment section first. Let's see what's going on there. And as I said previously, we're live as usual. Put your comments down or statements inside the comment section. Let's see what's going on there. Sempro says, hello, Miles and CMF. Good to see you, Sempro. How you doing? Ian says, Europe only cares about the money. I agree. Facts, Ian. Scott says, first, hello, family. How is everyone doing today? Glad to see my mentor doing well. Thanks for checking on me, Miles. Appreciate you. Let's go, Scott. No problem, brother. Anytime. Share the live. Let's go, Scott. Ian says, Miles, did you see Susan Fredman speaking in the comments about XRP? I didn't. No, I'll be honest. Send me the video after the live. Send me the video in. I'll check it out. Now, Ripple versus XRP. Sorry, Ripple versus XRP. SEC versus Ripple. Even with this Bitcoin news that you just put out, certain people in the CMF group will still not be convinced. I know. Now, Ripple versus SEC. Experts predicts next move in XRP case. So today we had some news come out regarding Ripple and SEC, and it was the news of Judge Torres essentially rejecting the filings from Ripple and the SEC. Now, in no way does this mean it's a loss or any sort of negativity for the Ripple case or Ripple versus SEC case in any sort of a way, or negativity for XRP in any sense. What actually happened was that Ripple and the SEC decided to do a loop around. and the loop around backfired. They tried to, get things done and dusted with a much more quicker rate, and the loop around backfired. The reason why the loop around backfired, even though they're both on the same page, just to point this out, Ripple and the SEC are both on the same page. What happened is because technically the case is in the appeals section, appeals court, which means Taurus is technically out of Taurus's hands. He needs to come back to it, you could say, in a sense. So Gary Gensler, just for a second, Gary Gensler, before he left office, he decided to appeal the Ripple case last minute, which then we saw Ripple's CEO also coming out and saying what an absolute idiot he is for doing that. We saw Ripple's CLO come out to make the exact same statements, and what of a moron he is for doing that, and so on. So what Gary Gensler did back then, appealing the case and making the Ripple case go to the appeals courts, is caught up to us now. So it's not it's not a negative situation in any sort of a way. It's just it created slight confusion, which is now being rectified. So the legal battle between Ripple and the SEC has hit another bump. Judge Torres has denied a joint request from Ripple and the SEC because they used the wrong legal procedure. The legal expert James essentially broke the news, stating that the court's denial was due to a technical misstep. Both Ripple and the SEC didn't use the correct legal rules when essentially making their filings. In other words, their request wasn't submitted in a proper legal format. While the judge's denial causes a delay, experts believe that Ripple and the SEC will refile their motion correctly, keeping the case on track towards a settlement just within essentially a few more hurdles. In response to essentially Phil's post, Attorney Fred added further insight. He said the meaning here is that the parties didn't request the refill under the right rule of civil procedure. So they will refile it under the correct rule. Reading between the lines, he suggests that both parties now need to get on all fours and beg for a relief. A essentially humorous way of saying that they'll need to be careful through essentially going forward. Users on X question how both legal teams from Ripple and the SEC could make such a basic error. And the response essentially was, no, they tried to do it easy way first. Now they have to do it the hard, messy way. The next likely move is for Ripple and the SEC to refile the motion using the correct legal procedure, which could essentially slow it down. But in reality, it won't, and the settlement is still there. This latest development follows a joint motion filed on May 8, 2025, where Ripple and the SEC asked an appeals court to pause the proceedings, signaling they were close to finalizing a settlement. That deal will include essentially dissolving an earlier injunction and releasing $125 million set aside for penalties. The case began in 2020 when the SEC sued Ripple over allegedly selling XRP as unregistered securities, and essentially partial court rulings last year sided with Ripple on retail sales but agreed with the SEC on institutional ones. Now, with Ripple and the SEC preparing to refile correctly, all eyes remain on how swiftly the court will essentially respond and whether this essentially long-running battle will finally come and see to its end. And it definitely will. Ripple's chief legal officer, Stewart, broke his silence. So Ripple's CLO broke his silence following a recent court decision that happened today that rejected the joint request by Ripple Labs and the SEC. And regarding the district judge's Torres is denied the party's motion for inductive ruling, calling it improper. So despite the rejection, the CLO of Ripple, Stewart, reassured the crypto community that nothing in today's order changes Ripple's win, i.e. XRP is not a security, emphasized that the ruling was not about the case's outcome, but about technical legal steps related to Ripple's essentially appeal. The denied motion had sought to reduce Ripple's $225 million civil penalty to $50 million and essentially lift certain restrictions from August 2024 judgment. Ripple and the SEC had come together to request this relief, describing the agreement as fair and reasonable. So Ripple and the SEC are still on the same page. They both want to close this case and they both want to walk away happy, which they are walking away happy because in their own words, the words of Ripple and the SEC, the conclusion they've came between themselves is fair and reasonable for both sides. The judge, however, dismissed it for not following the correct legal process. She pointed to Rule 60, which requires a showing of exceptional circumstances. The CLO of Ripple addressed this directly by highlighting that the court's decision was based on procedural essential concerns. His comments suggested that Ripple's core legal victories still stand, especially the court's early decision that XRP itself is not a security. And the CLO of Ripple's statements continued by saying, Ripple and the SEC are fully in agreement to resolve this case and will revisit this issue with the court together. The comment essentially on his tweet was filed with a mix of relief and a hope that the case could really soon reach a conclusion, which it will. Facts, it will. So, key things to walk away with. One, the Ripple versus SEC case is technically over. It was just a confusion that was created because of the idiot Gary Gensler that essentially appealed the case last second, and that's what the confusion background caused it here. Two, Ripple and the SEC are still both on the same page. They both still agree with each other. They both still want to essentially walk away from this case. That was, the longest case the SEC has pretty much had in the blockchain space. And they're both walking away reasonable and happy. And these are the words of Ripple, that they're both on the same page still. So nothing's changed. The SEC and Ripple are still, hand in hand moving forward together. It was just a judge from a little speed bump in the middle. This case is done with. This case is over. Don't worry about it. There's nothing to worry about. I saw some people, panicking inside the crypto space, panicking inside the X space, saying, oh no, I'm tired of this. I'm tired of that. I'm tired of Ripple case. I'm tired of XRP. I'm tired of this and that. Going back to what I said, when I shared you the news on the stats of Bitcoin holdings, the institutions don't need to push out the retail section, because the retail section tends to push themselves out. Remember that. Institutions don't need to push out the retail section, because the retail section tends to push themselves out. So don't be a statistics on some sort of a report paper, next time I'm reading a news where I say this many people from the retail section are holding XRP, but the majority are institutions. Don't be one of the people that get left out from that report. Is what I'm trying to say. On that sense, we've also come to the endings of tonight's live. So, on tonight's live, we talked about regarding the Ripple and the SEC case. We talked about essentially institutional investors in terms of Bitcoin holdings and, don't be on that report. We also talked about on tonight's live regarding the European Central Bank in terms of how fast they're moving towards a cashless society. We talked about quantum computing, a BlackRock perspective on Bitcoin. We talked about Chinese ginormous company investing into Bitcoin and other cryptocurrencies, $800 million roughly. We talked about FTX distributing $5 billion. We talked about Hong Kong launching a new police department for essentially catching criminals on blockchain networks, mainly Bitcoin and Ethereum is what they're aiming for. We talked about Wisconsin essentially withdrawing their Bitcoin ETF application, their filing. We talked about Russia deploying essentially 640,000 troops near Ukraine, essentially, potential impact on crypto markets. We talked about the UK government essentially on their new rules in terms of taxation. We also talked about on tonight's live regarding Bitcoin in 2025, where the price is heading according to essentially major institutions. We also talked about on tonight's live regarding the matters of stablecoin regulations, perspectives from other CEOs and where we're heading on that matter. We also talked about JP Morgan's CEO perspective. We talked about essentially BlackRock CEO perspective and Jerome Powell's perspective on the market space. So those are all the news topics we discussed on tonight's live. This was episode 308 of the CMF Live. If you're tuning this for the first time ever, this is called the CMF Live. It stands for Crypto Mouse Family. You can tune to this live Monday to Friday, 11:25 p.m. London time. Monday to Friday again. And I'd always talk about on this live the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, pretty much vital information for you to know about regarding the world completely transforming into digital space. And the disclaimer of this live, as always, is not financial advice, not political advice. Whatever I say is only for entertainment purposes. So tune in tomorrow for episode 309 of the CMF Live. If you also liked, commented, and retweeted and shared this live on X, thank you so much to every single one of you CMF members. And if you're new, you liked and retweeted this live as well, and you're watching us on X, thank you so much as well. And welcome to the CMF If you watch us on YouTube right now and you like the live as well, and put a comment outside the live as well, thank you so much for all the likes. Honestly, thank you so much to everyone who liked this live, who retweeted this live, and put a comment outside. If you haven't done that, CMF members, take 5 seconds to like and retweet the live, so we can expand this family and help a lot more people out. And also, if anybody wants to join our Telegram group or our X Spaces, we have an X, essentially, communities page as well, which anybody's more than welcome to join. It's called Crypto Mars Family. Crypto Mars Family Lounge is what it's called. Anybody's, everyone's more than welcome to join it. And also, you can join our Telegram group as well. Everything I provide is completely free of source. This live that you're watching, you can tune into a Monday to Friday, completely free. The Telegram group is completely free. So is our X communities page as well, the Crypto Mars Family Lounge. Now, before we do go, let's go to the comment section first, so I don't miss out on anybody's comments. Miles, what's the reason the market today got down? Not much of a reason. It's just the market's just stabilizing itself. Night Miles and CMF, Pablo, see you tomorrow sometimes as usual. Also, Jerome Paul did make some speeches regarding the sessions. Thanks, Miles. I'm so glad to see you in return. Let's go, Scott. Great live as usual. So glad you're back. Good night, Miles, and see you same time tomorrow. Artistic, let's go. See you tomorrow, same time as usual. Feels good to be back to routine. Good show, great information as usual. Much love, Miles. Let's go, Curtis. See you tomorrow, brother. Same time as usual. Thanks, Legend. Night and day, CMF. Let's go, Shelly. See you tomorrow, same time as usual as well. Good stuff as always, Miles. Appreciate the knowledge. Let's go, Sempro. See you tomorrow, same time as usual as well. Good night, Miles and CMF. Have a great night, Miles. Let's go, Free Forever. See you tomorrow, same time as usual. Good night, Miles and all CMF. Thank you for a great live and news. Let's go, JP. See you tomorrow, but same time as usual. Talking about spaces, we should do some spaces sometime on X. We should do some spaces on X sometimes. Why not? Why not? I mean, definitely. Now, just once again, honestly, thank you so much to Live Spaces. Yeah. Thank you so much to everybody who tunes in to this live from the CMF. And if you're new, thank you so much. I'll see everybody tomorrow. Same timing as usual, 11:25 p.m. London time for episode 309 of the CMF Live. Like, comment, retweet, see everybody tomorrow, same time as usual. Night, Miles. Cali, let's go. See you tomorrow, same time as usual. And Scott, see you tomorrow, same time as usual as well, brother. Same everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. CMF, see you tomorrow, same time as usual. Like, retweet, comment, subscribe, and follow if you already haven't. If you have, welcome to CMF. Mike, see you tomorrow, brother, same time as usual as well.